Hello, everyone. Welcome back to the rationalinvestor.co. Let's see if YouTube's there. It should kick in any second. Anyway, here's our weekend broiler chicken show. Boom. We're live on YouTube too. So I don't see that full of a room here today. So doesn't look like we have the stampede that we get for the daily briefs. But I hope this weekend offering we can have some fun here. It's about quarter to noon here, I suppose, on Sunday. I actually really like to take Sunday mornings and have a nice little team meeting. Some of our veterans had suggested that we put that together recently, and I thought it was a fantastic idea. And it really sort of it actually enables me to be able to give you guys a better sort of summary of what I see coming down the pike here. So thanks very much, Team TRI. I'm so blessed, to be honest with you, that we have this great community and we all sort of love to interact and work together to make this a better place. So hats off to everybody. So just wanted to get that out right off the bat. Get me all choked up, man. What do we got going on in the market? You know, the sad part about it is, and I've sort of talked about this repeatedly through these daily briefs and shows, and, you know, I sure hope the public doesn't freak out through all this. But we are coming to a bit of an apex in the market. There, you know, economic cycle, usually recessions happen in years of 8s, 9s, 0s, 1s, and 2s. Hey, Annie, nice to see you, Slick. So should we economic cycle wise be thinking some sort of top coming in here? Yeah. We have, of course, this long-term interest rate cycle that definitely feels like it's coming to some sort of apex here. And given this massive demographic moving into retirement, I think it actually makes sense interest rate cycle wise what's going on. What it does imply, though, is that we should actually be expecting through this pivot that the next 35 years are going to be of a rising interest rate environment. Actually, it was interesting too, listening to recent level 1 students who are going through the strategic planning part of the course and adding their content that they've, you know, sort of come in contact with through their journey. Somebody was posting, I think it was Michael, if I'm not mistaken, gave me a link and references to this fourth turning concept. And I think that actually plays perfectly with that interest rate thesis, that it moves on sort of like a 70-year cycle. And the various different points psychologically. There was one point in his interview that he talked about the societal's demand for security and government's ability to provide security, and how you can use those relationships to actually gauge what's going on in society. If we think about demographics, it makes perfect sense. The baby boomers don't want big government. They want low taxes, and they want high Social Security, Medicare, and any kind of services to service their needs in retirement. So what's ended up happening, if I understand correctly, is we have now a society that demands security, but our government is not providing the security and is not in the position to provide the security, which is actually the absolute worst possible situation to put a society into. Hey, rock on! Brian's positive message for the day. Woohoo! So I thought that was really cool. I don't know whether visually you can picture what I'm saying. I might even work on a graphic to sort of explain that cycle. But it makes perfect sense if we line up, you know, that whole interest rate thesis and sort of the value of paper, if you will, and how that's, you know, come to an apex as well. So, you know, on top of that, of course, we have now a huge portion of our population that has basically bought the message and has probably loaded up on U.S. treasuries and government bonds and stuff. And of course, we have central bankers that have been buying up the excess liquidity of those bonds. The central bankers themselves has started to say, you know what, we're actually going to stop buying the bonds that we have been buying, and actually we're going to start selling the bonds. And I don't think, this is one of these interesting turning points in history that when it happens and as it's happening, nobody around really sort of pays attention to it. But what we might find is 5-10 years down the road, we look back and go, son of a bitch, right when the Fed changed their stance from being accommodative and trying to help the economy to restrictive and trying to actually detach from the economy. This might be, one of these sort of pivots, and we're getting a pretty loud message from the U.S. And it's interesting, in our group meeting, we looked at the various different commodity proxy currencies around the world, and we noticed that the Canadian dollar is outperforming the Australian dollar and the Swiss franc. Swiss franc's looking rather weak. Australian dollar is looking relatively strong, but underperforming, not looking nearly as technically healthy as the Canadian dollar. And that may just be sort of a proxy on America, right? And this region of the world is actually economically strong. And I even suggested to the boys, and I thought it was a good idea, that we have we have the Bank of Japan speaking to, and really it's actually interesting, through this window, we don't really have the ECB saying a heck of a lot. We don't have the U.S. Fed saying a heck of a lot, but we do have this Bank of Japan governor, I think on Wednesday, speaking. And I think we really need to keep an eye out for what the general message is out of the Bank of Japan. If they also sort of reiterate this, we're detaching from the economy, this stimulus that we've been throwing at the market for the past 5-10 years, the pivot that years down the road we're going to say, oh wow, you remember that, yeah, and sort of the what started this turn, that might be being placed now. That's sort of one of the big things that's sort of caught my attention here of recent. Trading wise, I think it's only natural that things like equity markets and stuff, come back down to earth here in October, November. I actually, in a weird sort of way, I actually think Bitcoin is actually a leading indicator for the market here. So seeing its relative weakness here over the past month or two is actually, or not month or two, but a few weeks, I think actually might actually even lead the market down in a weird sort of way. So, they don't call it the fall for nothing. If we do have to get bitch slapped here over the next couple months, and it's a bit of a slog, guys, just, be prepared for it. Don't be shocked if you see that the market has to take a bit of a pause here, and that includes crypto. I think there are individual bright spots, and hopefully today we'll talk a little bit about a few of them that I think we see, and maybe some potential ideas for you to chew on. Is this sort of the type of the time of year even for us to, pound the table, load up every, all in? No, it isn't. But little nibbles here and there at good trade locations. You want to, trade setups and manage risk appropriately on relatively small, portfolio size bets. I think that's appropriate. If you want to hunt some short ideas in the broader market, like we're trying to, grab some euro currency put options, that's, there are opportunities out there. You can go shopping one by one. We didn't really in our team meeting take too much of a look at stock trades. And I know Julian has been really interested me in hunting stock ideas. So I will sort of keep that in the back of my mind, especially maybe after I'm done with Liam tonight, if crypto isn't, going insane here. I will maybe do a bit more work on that. But all in all, I think we just sort of need to set, it's interesting, even our algo has gone, kind of cautionary here. And we know in these kind of situations, while the slow is still heading up and the fast is screaming down, the market's actually pretty vulnerable in this situation. If we look at even just the algo itself, I mean, M's and W's, you guys have heard me rant plenty about that. We're looking very Emmy at the very top end of sort of overboughtness. So, I mean, the interesting thing is it's almost like when the market does break, people are going to be like, oh, gee whiz, I sure wish there was some sort of, tell. There is quite a few tells here. But, we just have to listen to the market. That's all. All right. So Mr. Doom and Gloom, happy, joy, joy. Maybe hunt, like I said, we are trying to play the short side of the market through the euro currency. It's fun to play our games with the market makers and these illiquid options, but I think there's money to be made here. So I'm trying to sneak in stinky bid off of this option, but I think there's money to be made here. And also too, what I noticed, coming out of the team meeting, thought it was great, that we just take the time to review this U.S. dollar index. Our sort of idea of wanting to be short the euro is sort of, in essence, in a weird sort of way, it's almost like wanting to be long the U.S. dollar because these two are so heavily weighted to each other. I think I can make the argument here that we've got the U.S. fiscal year end coming up, and I wouldn't be surprised if there's still some FUery. You can see where the trend line support is here. So anywhere in this sort of area, I really like the idea of the U.S. dollar bottoming and looking for that sort of counter trend rally move. 38.2 is just off of this range, even though these are old levels. I haven't updated this in a bit. 38.2 sitting up here at about 95 and change. And then, guys, institutions who actually do want to be short this thing, they're probably actually gunning for this area up in here. And if the U.S. dollar index is a fear proxy, if this thing starts to get going in earnest, it means that money is coming out of sort of risk on assets. Maybe there's talk of, the United States, of course, is trying to clean up its balance sheet, right? The U.S. Fed and all that, which too, basically is the U.S. dollar index. Maybe we actually start to hear like talk of markets contracting. Maybe that's going to kick the crap out of the euro economy and sort of risk off assets, catch a bid like the U.S. dollar. Anyway, shape it here. I hope you guys realize, just from sort of a trader perspective, if I'm going to be hunting long bets, in the U.S. Commodities arena, if you actually want to take a really, really simplistic look at this, a guy I used to work with, Kenny Roberts, years and years and years ago, he would just simply ask, right, what is the 52-week high and what is the 52-week low? And are we near 3 to 5 year highs or lows? And of course, the more that is the case, the stronger the case you can make for a trade. So being down in this area, you can see that we're actually 1 year, 2 year, we're getting down to sort of like 3 year low area. So on balance, that in itself is, reason to consider that, hey, there's a trade that could potentially be developing here. And then we do our sort of like 50% rules, and you can see taking long shots off of here. And this is why I love options, right? Just taking a long shot off of here. If I throw $1 at this and, there's a realistic shot, even 50% level, if I maybe like buy the 95 call and I throw like $1 at it, can I see, there's the 50% rule, can I see like $2.35 on that option? Believe it or not, I think, yeah, you could. And it's the kind of bet that as a trader, I don't necessarily know whether this is the bottom, but as a trader, especially if I'm thinking like futures and stuff, I'm kind of thinking like Sebastian FU's, a nice little test of these lows into this fiscal year end. we're fishing for a top in the euro. I'm feeling like there's a trade here. I mean, guys, what do you think? Look at that chart. That was an altcoin. Would you be buying it? All I have to do is say, if that was an altcoin, what do you think we should do? Kevin, should we be buying this if this was an altcoin? Is this a Kavark? I don't know. Wow, no, am I still connected? Wow, is anybody hear me? Hey, there's any. Anyway, so hopefully, the chart basically speaks for itself. Really should. Okay, so that's sort of what I'm thinking about broader market. Yeah, there could be a little bit of a punch in the nose here. I could see it. It's a shame, but it is the way it is. If we look at the stock market, things like S&P 500, I've been sort of squawking to you guys about this megaphone pattern. Can everybody see the megaphone here? I mean, it's almost cliche. It's so cliche. Isn't that cool? So we worked our way right up into here. I really thought we were going to tag the top of this, but I've seen lots of times where the tops of these megaphones, it'll be just some sort of funny, and then all of a sudden, boom. Can you see where the 38.2 is? All the way down here, right at that damn megaphone level. It's like cliche. Isn't that incredible? So the only problem with trying to play options on these damn indexes is that the ETF now alone is like $250. So, if I want to buy like 6 months of time at the 50% level right down here, I mean, I got to put like a couple grand down on the damn trade. It's so expensive. So that's the number one problem I have with this trade. I think there's lots of money to be made here. It's just so expensive. I mean, I'm a poor guy. I'm sorry. I can't afford to throw $1,500 at an option. My account just isn't big enough. So that's probably the biggest thing that's preventing me from really going and hunting in earnest this trade. And if anything, maybe we should, and some of my guys that are interested in the stock market, maybe you can do this for me. We should maybe try and find ETFs that aren't priced as expensive as the SPY that still move in the same sort of statistical pattern, because percentages are percentages are percentages, eh? So, and maybe Garrett, right? Here's a special project for you. I don't know whether you're listening or not. Can we find like a proxy on the Toronto stock market, right? That trades down, that's an ETF that's relatively inexpensive. They got the, and actually this would be a really interesting view. Let's see what this looks like. This is the Toronto Stock Exchange, the sort of ETF that follows the index. Wow, look at that double bottom. Isn't that interesting? Wow. And actually that sort of corresponds. This is sort of the one part of the market that has me a bit confused. Actually, I'm kind of glad that I pulled that up. Can everybody see the Kavark setting up here? I can totally see it. Kavark, all day long. Look at that. Actually, they may not even Kavark it, but you can see these gaps, right? If I was going to buy this thing, bottom of value, you can totally see the trade setting up here. But it's interesting because, and if anything, I think it probably looks like this. This actually is really interesting. So what does this mean? There's a message here. Because you see how the U.S. stock market looks extremely toppy. But this one, it almost looks to me like there's a short trade setting up here right at the top of value. See that? And with all of these gaps, right, obviously there's lots of unfinished business. So what it almost looks like to me, and maybe this is a function of that EVU, I don't know. It almost looks to me like it's going to be like this and then like this, but the Toronto stock market's probably going to hold these lows, whereas the U.S. market takes a real shit kicking. Isn't that interesting, eh? And maybe it's a function of the silly tech stocks. I mean, do you see the difference in that chart? This is the NASDAQ. And look at this, guys. This will shock you. Well, actually, it's not that bad. Phew. What letter of the alphabet does this sort of look like? It's not really the best, but I thought that was a higher high there. But do you see the M sort of pattern here? I mean, what a difference. That's actually quite surprising that there's the Canadian stock market. There's the U.S. stock market. Holy moly. Is the U.S. stock market a little bit vulnerable? What do you think, guys? This actually doesn't really even make a heck of a lot of sense, does it? It's like one is acting rather technically normal, and then this one just looks like it's on an insane roller coaster ride. And also, too, and do any of you guys follow that Peter Brandt guy? Because he was tweeting about this. What kind of chart pattern is this, guys? Anybody know what that is? I wasn't expecting to talk so much about the stock market. Sorry, guys. That's that. And is that pattern inherently bullish or inherently bearish? That's not a good sign, guys. Anybody, really what we should all do as soon as we hang up here is go and figure out what the hell put options are on this goddamn thing. Excuse my French. All the kids out there. Uncle Brian let his tongue slip there a bit. Let's go see what. And here's the problem, right? I mean, let's do the analysis, and maybe there's a trade here. I don't know. I gotta buy some time because Brian's a nut job when it comes to time. So where do we want to go? Let's go maybe March. So we're sitting at 144.32, and let's do the whole darn shooting match. See what we got. Where did the chart go? So 50% level sitting at 118.87. So maybe something like a 125 put. That'd be interesting. So that option will have an intrinsic value of, oh, that's 61.8, isn't it? Where is the 50% rule? There we go. So that's 125. So maybe let's go look at the 130s. So that should be worth the 130s at our target should be what, $6 roughly, $5.80. So what is the price of a 130 put? Oh, isn't that interesting? So, and actually look at the heavy, pretty, look at that, all that open interest. Wow, look at that, 140. Huge open interest. All right, well, actually, this is kind of cool because this is, in essence, today's video is actually sort of a walkthrough of how I'd sort of think about a trade. So we will put, what do we do here? Are you going to cooperate? Maybe not. Let's try that again. Oh, we were doing the fun walkthrough. You're not going to walk through for me? Oh, well. All right, so I would paste that right in here. I'm not quite sure why that's not cooperating. But you can see there is potential there. Oh boy. Oh boy. Oh, they killed my matrix. Oh, good old trading view. Oh, mercy. Yeah, so TradingView really has messed around with me here recently. So anyway, lost that chart. Let's see, where can we do this? I think we can do this over here. I don't want to mess around with that thing because I did want to keep that. That's too bad. Them's the breaks. Gotta roll with the punches. So where did we have that? That was a 130 put, eh? Right there. And let's see if this will work. Paste. There we go. So that's an interesting trade. Looks a little different. What did I do differently here, I wonder? I guess maybe we drew it off of those lows. 52-week range. Actually, here's another good example to use the 52-week range. So where is, oh yeah, so last seasonal lows are down in here. That's probably where you should do it. Jesus, that market sure has gone a long way. Eh? So 130, the 135s, I think we said. It's actually not a bad trade. Right now they're $2.30, and they'll be worth about $5 at the 50% level, which would be nothing more than bringing the market back against here. I could probably see that trade actually work very quickly. Well, I might consider it for tomorrow morning. It's not bad. Might even, you know, on the shorter term, let's see if maybe we can and drill down to here. There we go. So you can see the M that I was talking about earlier, right? I don't know whether you can see that or not. Sure looks like that's one hell of a level. So considering we could pay, what, $2.50 for that option, it's sitting 231. Can't pay the market. But I could see a trade setting up through here. Right up there. So, you know, that would be TRI SOF trade. And I think that makes sense. Yeah, I might seriously give that some serious thought in the morning. So there's an idea for you in the stock market. Actually, two ideas, right? We got the euro put idea to trade the currencies, and we got the QQQ idea to trade the stock market. All right. And it was interesting that XIU, because I actually think that, you know, something like this rallies up, this thing tanks, boom. And on the XIUs, all they're going to do is just bring the market down into a buying zone. And I wanted to mention that to you, but actually TradingView just fucked me over. I used to have on here a crude oil chart, and it's such a beautiful chart that I did up. But I'm toast, right? They just killed this. So I can't show you that beautiful chart. Oh, well, what can you do? I did tweet out that chart recently. Not a bad just reference for you guys. I was, and actually in the daily brief, this was really cool because I did sort of a, this, oh, that's not my chart. There it is. So Head and Shoulders is working here, and I saw prices are slowly moving up. And, you know, for the level oneers, and I talked about this in a daily brief through the week, thought it was really cool how the bullish percentage on the oil sector is starting to perk up here. So that to me, I thought was so cool because, and it also explains why Canada is as strong as it is, because Canada is heavily, heavily oil related. So seeing this action, seeing what we saw in the Canadian stock market earlier, looks almost exactly the same. And then seeing that oil chart, that's the one caveat to all this. That doesn't make me think that this stock market is going to crash, that it's going to be more sort of a technical trade in nature. And sort of gives me that idea of hunting that short setup. Because does it make sense, guys? If oil has a big rally here, that's going to make tech a lot less attractive. Should I go through the why that's the case? I don't know. How are we doing, guys? Have I bored the hell out of all of you? Is anybody still out there? All right, maybe I you know, because we are recording this, and there probably are people that are going to watch this that haven't heard my rant on this before. I think what you have to think about when you look at something like the QQQs, the NASDAQ, this is what this is. This is a ETF on the NASDAQ stock market, which is basically a tech stock market. Tech is really nothing more than a productivity story. And it's really interesting, actually, the evolution of Apple, because Apple and Microsoft basically started side by side. Apple decided to go the personal computer route and appeal to the consumer market. And they did really well. But Microsoft decided to go after the corporate market. And in the end, especially through, like, say, the late 80s, when Apple was really booming, Microsoft just took over through the latter part of the 90s when, Windows came out. And because they appealed to the corporate side of the world, their profits were just staggering in comparison to Apple's. So the point here is that if you can think of technology from a corporate perspective, it's never really a case. And also think of, like, government budget, same sort of thing. A Fortune 500, and townships, their budgets are almost the same. And it's not really a question of, do they have money to spend on certain activities? It's just a question of how much of their budget has to be allocated to different things. Actually making the widgets, that takes money. But marketing the widgets, that also takes money. And, if you can, of course, invest in things like, and I don't even know if any of our audience is around, and all the bleeps are going. So everybody's going to be like, Brian, turn the damn bleeps off. I know there's one guy, China Tim, who's like, oh my God, that drives me crazy. So I got to turn this off. Hold on. All right. If we can think about it from the corporate perspective, then really it's a question of where are they going to spend their dollars. And if they can, they will spend those dollars on doing things for the company that's going to increase profit margins. And so in a pre-Microsoft Windows world, it was very labor, very paper intensive. And I remember when Microsoft Windows was introduced to sort of the computer world, how dramatic of an impact it had in worker productivity. And things just flowed a lot faster. So if we can think about tech as nothing more than just a vote on productivity, then business managers are going to invest in tech as much as they possibly can. But if other costs to run business start going up through the roof, well, they're going to have to cut back on that productivity investment spending. So we often see a high correlation between tech and NASDAQ and energy, actually an inverse correlation. So energy prices go down, tech and tech investing, and if somebody could please mute Mohammed, I would appreciate it. Oh, I left. Okay. Tech and tech investing, they often go down if energy prices go up. All right, there's my soliloquy. Oh boy, that was difficult. So if we actually take a chart of something like oil, actually, I don't know whether we can do this, but this should be a cool comparison. If we see a bottom, yeah, okay, so there we go. So oil prices relatively high, oil prices trending down, tech trending up violently. Oil prices now appear to be turning the corner, so it really shouldn't surprise us that tech is looking heavy here. I think actually it makes a lot of sense what's going on. And, couple the fact that we have all these bullish percentage, Canadian stock markets taking off, right? Hopefully everybody can see AB equals CD kind of action here on oil. It sure looks like oil wants to go up here. And then if we overlay that with our bearish wedge pattern, which clearly is developing here, I mean, this is as plain as day. I think we got ourselves a trade idea. This is not bad. Actually, I think this is a pretty productive broiler chicken show, and we didn't even talk about Bitcoin. Oh, that's funny. Sorry, guys. And everybody here is going, that's not funny, Brian. Okay, so you just heard me, Brian, rant for about a half an hour. Hope you enjoyed it. If you're not interested in the stock market, let's talk Bitcoin. And just as we See, and really, I think our conversations about tech here, I think, are perfectly apt. But just as we see potential weakness in tech, I think I can see potential weakness here in Bitcoin going forward. It sucks. Everybody's like, boo, hiss, boo. You need to watch the whole picture of markets. Well, indeed you do, Change. And really, especially in this game, guys, I mean, I've been playing this game for 3 years, listening to the rhetoric, listening to this time it's different. It isn't. This is exactly the same shit, just a different pile. And, the message of the day has got to be seasonality. And sometimes markets go up and you just can't explain why they go up so insanely as they do. Well, if the market is poised for bull and it's seasonally appropriate, look out. If the market is poised for bear and it's seasonally appropriate, uh-oh. Right? So if anything, that NASDAQ chart is, I think I got to call my broker. What time is it? Jesus. No jokes at all. Jeez, if it's not a crypto joke, I can't get anything out of you guys. See, I say crypto and I got to laugh. Okay, let's keep moving forward. And, it kind of sucks, right? Because we had one gentleman like yesterday was like, oh, we got a fractals and okay, it's right. I'm not going to. I just got to say, guys, I don't see it. I think if anything, and this was the note that I had written on this chart this morning, I think we potentially had a nice little inverted empire forming here. And if this does fire, then rock on. But you can see coming right out of the gate, today's action's been down to the downside. And, what time is it? It's 12:20. The new bar prints, the new day's bars prints in about 4 hours, 5 hours, something like that. Anything could happen here over the next 4 or 5 hours. I mean, I'm not here predicting the future. I will just simply say that if this is an empire and if it is a fractal, then we're going to get our butt up through here. And I'll tell you this much. With this candle looking the way that it is, if this thing does reverse and actually turn back up, that is a monstrously bullish signal. It will leave a nice little tail in here of trapped bears, so we'll know down the road that this is a monstrously important level. But is that the case right now? No. As well, too, guys, and I think this is why I like the idea of it playing into the stock market top kind of scenario. I could see us just simply completing this very normal descending wedge pattern. Thankfully, though, guys, this is a descending wedge and not an ascending wedge. If we saw this on Bitcoin, I'd be like, oh, fuck me. Excuse my French. I apologize to the children and ladies in the audience. But if anything, like I said, I'm getting pretty damn interested in shorting this. But on Bitcoin, a descending wedge is the exact opposite of an ascending wedge. If we do actually play out this way and come and clean this market up down in this reload zone, not only is it going to be a Kvark kind of setup, but this descending wedge pattern, this is a sign of exhaustion. And of course, we have sort of similar rally and correction windows here. This market, if we can do this in a relatively orderly fashion and we don't, people don't crap their pants and it just is nice and polite, and we get a sort of sell the rumor heading into that China FUD, and then just a nice, polite, quiet bottom through here and accept through this trend line. Oh my God. I mean, I'm going to be fucking like futures, OK coin going crazy. Right now, I was very interested in letting the market have a bit of Bitcoin up here. The fact that it's looking like this actually is a good sign. To me, it says that actually I don't really want to be a seller. I want to just simply wait for it to back up and politely bottom here and go and buy some more. That's just Brian. I don't know. Call me crazy. But that's sort of what I'm seeing right now. That's my 2 cents. At the same time, though, could we easily see $1,000 price swing here? Yeah, it's true. I'm not going to deny it. But we have to understand the insane volatility on the way up. Well, I mean, you all enjoy this insane volatility on the way up, but you don't realize that the market is a price exploration process. You got to get used to it. This is Bitcoin, guys. The interesting thing, and I'm kind of feeling this more, but maybe this is just Brian's bias, is I actually do like the idea of a nice little face rip up into sort of $7,000-8,000 to finish this peak. That's sort of where my gut is leaning to, but we'll see. Only time will tell. If anything, what we really don't want to see here is we don't want to see the market come down, test these levels, put in a bottom, and then rally up and then put in a top through the reload zone. That would actually create a very well-defined harmonic pattern that might actually sort of seal our fate that we're done here. So let's see how we act. This is going to be an interesting battle. I think and actually I had a really cool chart that I put up earlier. Yeah, this one here. I'm kind of, and this is just Brian's opinion, right? And as I've told all of you guys before, how much I think of people's opinions. So really just take it at face value. It's just sort of what I like to sort of ask if the market is trying to tell me a message, and this is the message that I see. Doesn't necessarily mean it's going to play out this way, and a lot of the time it doesn't. We have this original megaphone. You guys have seen that image from me before, but I think I lost that chart. It really sucks. It was such a cool image. Yeah, it's gone. Trading view. Anyway, I had this really cool image with a megaphone, right, showing this expanding wedge. I've also been talking to you guys about how I kind of thought that this was a pivot for the market. Spent a lot of time going back and forth here. It felt like maybe we were going to AB equals CD our way up into this, and then we rolled over, clear M top here, no doubt about it. We backed off, and I actually think still at the moment we're going through this 38.2 war here. Frankly speaking, I don't know who's going to win this war, right? You can see the back and forth here. And if I did one of those symmetry studies, right, you can see the symmetrical nature, head and shoulders kind of talk. I think if anything, the war is going to be won or lost based on a resolution through that high there or a resolution through that low there. And you're like, well, thanks, Brian. That's like a $100 window. But you can see the sort of battle of the 38.2s right now, right? You guys remember that? The battle of the network stars back in the 1980s? This is the battle of the 38.2s. Nothing? Geez, you guys are a tough crowd these days. Really, I don't think we can actually make like a conclusive decision out of this until these levels are taken out. If we do decide to continuation, and sort of what I was thinking was, that's a nasty M there, right? Then really we got to be sort of thinking back down to this 78.6, which would make a lot of sense. We talk about institutional fingerprints. Can everybody see the fingerprint here? The bar that made the low plus the preceding bar. It's quite remarkable how they do this time and time again. So right there to there. I'll make that like that. So you can literally see the top of that fingerprint, right, is right there, and gee whiz, 78.6. You also notice, look at how there's a notch right there on the profile. There is that AB equals CD. Isn't that cool how that all lines up? So no doubt about it, there's probably a level somewhere in here somebody's going to defend. Right here, right now, we're kind of stuck in no man's land. I could easily see a bearish bot set up off of, say, like, this is a 2-hour chart. Maybe like if we went down to like a half-hour chart. So you got 1 high, 2 highs, 3 highs. Well, maybe. If you wanted to trade that to the downside, there to there. Set up the bot. Whoops, it's backwards. Where's Wayne? Is Wayne going to hold me to account? There he is. 33, but no more than 66. Well, it's done that. So we say it's alive. You guys ever seen that? I used to always post this whenever the bot came alive when I was trading a lot more. I used to, in the library, we've got that Ace Ventura, It's Alive video. I used to always post that. Anyway, the levels now for the trade. And I got to make sure they're correct. There we go. Oh, look at that. So the market is literally setting up right off of that level. Look how the candle body closes are right on that level. We change that to a line chart. That's going to be cool. Yeah, right there. So we break through there. 1 high, 2 highs, 3 highs. You can see the short trade setting up. So it's trader's life. Traders got to trade. You know, go and find your MEX charts and all that kind of stuff. Set up the levels. I don't know what OK Coin's looking like right now. And actually, this is kind of a fun experiment that we did over the past quarter. It's just simply listening to the momentum through RSI message of the market. Really cool study we did. If anything, here's a great, you know, there's so much to learn off of this chart. Where do you want to begin? Really good example off of the dailies where you have an initial trend, then you have like a secondary trend. And when the secondary trend breaks, that's usually the end of the run. And so in essence, that sort of explains why price is back and forth here like this, right? Through that momentum. Really cool. Julian's going to do a total like full on sort of like little mini course on RSI, all the uses of it that he has and examples and stuff for you in the new year. So totally stoked for that. I'm a big fan of sort of the 50 line resolution, telling us a lot of message of the market. So you can see, you know, just even off the daily chart, how important the resolution of this 50 level is. So you can see how we came up to the 50. Are we really a bull? Maybe not. And then if you go down to the lower time frame, you can see that, right? Am I a bull? Oh, big fat M. No, I'm not. And that's cool. Look at this sort of rally back to the 50 line. Well, okay, no, maybe I'm there's an M. No, see you later. And if anything, you know, you can just simply draw trend lines off of these peaks in momentum, right? And that gives you sort of a guide where to expect going forward. And then you can drill down right down under the 1 hour. And here's a great example of that double trend line concept off of the hourlies, right? Which basically said, you know, at this point, the break of this second one, right in here, the market really isn't that weak anymore momentum-wise, right? And that's while you, in this particular case, you could have seen lower prices. Does everybody see how that set up a divergence there on the hourly? So that's kind of a cool example. Everybody see the divergence? Boopity boop, boopity boop, which was confirmed right here on this candle right there. So actually what's interesting here is, you know, for RSI aficionados, we could even start drawing just simple trend lines off of this hourly basis right there to there. And just as long as this trend line isn't broken, which interesting is the original trend line off the double bottom. As long as that isn't broken, you can keep hunting long setups. If anything, you know, you can also go like this. Right? You can clearly see the intense battle at this trend line here, right? See how they broke it out? Yeah, I'm a bull, I'm a bull. Oh, no, don't ham out on me, you bastard. And now they're just sort of riding the other side of the trend line down, eh? Isn't that cool? So really what we want to see is we want to see, you know, for momentum players, this is purely just a price momentum tool. What you would absolutely love to see is a nice W come in right there, eh? That would just be a monster bull signal. So keep an eye out for that. Really, and to be honest with you guys, I have no idea which way we're going to go. I still think that we're in this battle right now. You can see the bear level setting up, right? And of course, if this all falls apart and it M's out here, then you know the bears won. If this thing W's out, then we could start going AB equals CDs and then thinking about these big ones firing. I guess I was kind of thinking and this is why I mentioned this chart earlier. I was kind of thinking, if we do AB equals CD, come down into this level, that block right there, right? And then we go A, B, C, D. That takes us up into this level because I've been looking for this level for a while. And I don't know how the damn market's going to get up into the reload zone, but I'll be damned. I'm sticking to my guns. I still think that we're going to visit the top of value here. It's just called Brian crazy. I don't know. I've been playing this game so long. I'm just going to stick to my damn guns. So maybe it's just personal bias, but when I did draw these lines, it sort of went, wow. Because this AB equals CD, which takes us down into here, and we talked about all, the profile and all that. Then if I go A, B, C, D, wow, right into my level. And then what I did, which sort of kind of solidified why I was thinking this, is that we've been working this damn megaphone for quite a while. And the question is, how do we work our way down to the bottom of the megaphone? And if we go A, B, C, D, and then we do a big A, B off of this part of the range and extend that off of whatever the destination is here, lo and behold, doink. Does everybody see that? And that caught my attention, right? Because I'm wondering, how the hell does this thing play out? So that's sort of how that thesis developed. I haven't got a fucking clue what's going to happen. But if it does play out this way, then levels that I'm looking for that, historically, keep in mind, I've been doing this for a few years. I've seen markets trade to reload zones. They like to do this. And also that would be, a visit of value high. Would also maybe be a tag of this primary trend line up into here. It would be a tag of my pivot that I still think is active. There's a lot of reasons that would be validated if this played out. And then I noticed, which sort of like I said was the censure, if we take an AB off of this entire range and project that off of that, that gives us our final, megaphone conclusion. So that's sort of what I'm thinking going forward. Take it for whatever it's worth. It's just Brian's opinion. And really the interesting thing is I actually think right now what's dominating trade right now is still our good old buddy 38.2. It's funny how Ray Burchett just keeps coming back to me all the time. And really his attitude is this is a horrible trade location. So take it for whatever it's worth. All right, so that's sort of my Bitcoin thought. I sure hope that helps, guys. Giving you some interesting things to think about here. And if anything, I think what we might even want to do is create sort of like an early sign-up list for Julian's module, sort of as a side project. And if that sort of hits critical mass, then he's going to be like, God damn, I got to do this. So what do you think, guys? Would anybody be interested in something like that? Is that to me, Garrett? Is that a couple yeses? All right. So, all right. Actually, and I love doing these broiler chicken shows. Half of the reason why I like to do it is because of this kind of stuff, You never know what the hell comes out of these things. It should be, I know I've been ranting a hell of a lot today, and there's one guy on the site that I think likes to make fun at how much I talk, but oh well. Okay, let's maybe open the floor. And do we want to keep working through the list? Or, maybe why don't we'll leave the list unless anybody, yeah. Oh, somebody says, can you review IOP BTC? Yeah, I noticed that IOP is perking up here, eh? Also, I mean, there's a lot of really cute names. Here's Mo's coin that I bought. Look at the cute little double bottom that's trying to come in off of Mo's coin. But I noticed, man, there are a lot of these coins that are bottoming. Just some really, really cool little stories. There's STORJ, I think it is, Storage. When I saw this, I went, holy crap. Look at that cute little bottom. Beautiful divergence, right? Look at Willie. Look at this bottom in OBV. When I saw this, I went, holy crap, what the fuck's going on here? Excuse my French. If you want to try and get in this, I've already got lots of it, but you can see I've drawn a reload zone off of this range. You can see this original bottom down here. You can see the bottom of value. I'd love to work stink bids if I didn't own this to come in off of this level here. So what is that? That's about 11,000 or so, something in there. I thought that was a really interesting chart. And I don't know whether it's confirmed the double bottom. If you want to wait for the actual double bottom level to break out and just simply buy that, totally fine. Momentum play. 13,880. There's your magic number, 13,880. And that really isn't a hell of a lot far away from here. You know, even and this one's funny, right? Because I love, you know, every season there always seems to be coins like this, always. But this coin here, it couldn't buy a friggin' friend, right? This thing just was a face plant. But the interesting thing is it's alive, and the guys who do the website and stuff, they seem to be still active. And the irony of it all, guys, is it wouldn't surprise me. This is crypto. Wicks and tails like to be eaten. It wouldn't surprise me to see this son of a bitch up into here. And if that happens, I'm going to be a happy camper. As for the short term, you know, I still think, you know, little old ladies, I think it's just an awesome little strategy to just simply force yourself to wait for the reload zone to consider buying. Really don't think it's a good idea to chase things. If you could have bought it off of the double bottom breakout level, awesome. You know, there's nothing wrong with that at all. You can see the value matrix here, a little, you know, concerning. I don't know whether I could really justify coming in and paying up here. It's a bit expensive. And really, I guess what I'm thinking here is that they did back it up into the reload zone. They put in actually a nice little inside bar reversal, so we probably see that off of the lower time frames. So if you are trading this thing, right, you can clearly see lower highs and lower lows, but check out the bull divergence. Can everybody see that? I mean, this is, you know, especially if you want to trade this stuff, you know, leverage, higher sized of your portfolio. If you break 5% risk, you better get the frig out of there, right? Don't want to blow up your account. Can everybody see that divergence there? In fact, you know what this probably is? This is probably an El Tangonator. I don't know. Can anybody see that? Hey, look at that cool picture. Never seen you before. Gaetan. How am I supposed to pronounce that? Hello. Hey, look at that cool speedboat. Jamie. Does that thing go really fast? Hey, welcome. Hi, Jamie. I put you get. Oh, that's cool. A lot of people I've never seen before. All right, welcome. Okay, where were we? This actually is an interesting setup in that I love when Willie gets nice and stupidly washed out oversold there. And then I love to simply draw a fib off of whatever the low is and simply ask, can I have a 50% retracement? So that's up there. So the El Tangonator has his bullish divergence in MACD and has his Willie stupid, and he's just going to simply ask, can I have a double bottom to work with? And you could, you know, be lazy and just say, you know what, I'm going to trade that double bottom. I'm going to buy there, and my target's going to be 50% roll. That's right there. I would risk against the actual double bottom, so that looks like it's there, right? This low is slightly lower than this low, so there to there to there to break out there. You actually end up going long right there. And 50% level, let's see how it did. 2-1, right on the nose. Do you think it's an accident the market stopped there on a dime? What do you think, guys? Does anybody see that? Do you think that's an accident? I don't. I don't think it's an accident for a moment. I don't know. It looks like Payman can see this. I don't know. Wayne, can you see this? Michael, Kevin, Jeremy, Colin, Garrett. Anyway. All right. So I think basically that's the setup right there, right? Pretty simple. And if anything, this now looks like a nice little bull flagpole. Right, where the top of the flagpole is there. I think the base is like maybe down there, something like that. And like so. And like so. And actually, this is so cool because there was something I was working on today, which is exactly the same thing. There's an old rule, and if you've never seen this before, not a bad idea to write this down, that flags usually resolve 2/3 of their apex. Yeah. Putt for the fun of it. Putt for the fun of it. Putt for the fun of it. Only Garrett would understand that because he's in Southern Ontario. And even then he's going, man, that's an old reference. Do they still have putt golf there? And it's in Niagara Falls, Ontario. Anyway. So does everybody see the bull flag waving in the breeze? It's kind of cool, eh? Take a screenshot of that, man. That's the shit. So they usually say that flags resolve 2/3 of the apex of the pennant. And what's really cool about this is, can you see, in essence, we have a big W there. And we also have this really cool little W there. See that? Isn't that cool? I mean, super, super power. I mean, if I was sort of watching this and, trying to keep an eye on trade and all that, holy moly, this is a powerful, powerful breakout right there. And if anything, what's so funny about this is, check this out, right? There's that cute little flag that's trying to form right here. See that? It's exactly the same thing. I can't do a straight line like that. You see a little flag? A little flaggy flag. And that looks like that. 2/3 apex, probably somewhere in here. You might even see, watch closely, right? You break through here, you might get a nice little pop right up into there. Brian, isn't that a cup and handle breakout? Cup and handle. Cup and handle. Yeah, well, I guess. And especially if we maybe change this to a line chart. Yeah, it's a bit cockeyed, but it's sort of there. Yeah, I guess I could see that. Right along here, something like that. So you'd go like this. Droop, droop. I think this, this actually looks more like a head and shoulders, to be honest with you. And then like this, and that. So again, sort of the distance of the flagpole projected up. And you can see how the market's slowly walking itself up here. So is that what you're sort of thinking? Who said that? Kevin Stamford. Yeah, that's valid. But like I said, I kind of think this is a head and shoulders, because check this out. Which, technically is basically going to give us the same objective. Where are we? There we are. Let's go like this. To there, to there, to there, to, really there, to there, to there. Kind of the same thing, eh? You see that? Yeah, I'm kind of thinking somewhere. Usually what we do, and really, this is actually where it's a good sort of analogy of creating windows. So I'll take this little flagpole And technically, the target of the flagpole is the distance of the pole projected off the bottom of the flag. Does that kind of look like something you've ever heard Brian talk about before? Maybe. Like, or like there to there to there to there, right? AB equals CD, right? That kind of thing. Hopefully that makes sense. The head and shoulders actually says that, and sort of cup and handle, same sort of thing, says that this is a trading range and we actually have to go up there. Isn't that cool? And, you know, if we actually zoom out and look at the big picture, right, this is where we always say, you know, when in doubt, zoom out. So what's really going on here? And really what I would say is you had an initial burst, woohoo, right? Then the market said, are you for real? And now it's sort of like, if we're for real, we're heading up here, right? And, you know, we talk about this sort of capitalist process. It's got to go, the capitalist process can't go straight line forever. It just can't do it. So what ends up happening is you get sort of maybe not that big. Institutions take their position right down in here. They pump it and shill it to the public, but they can only shill for so long. And then the public's loaded up. And of course, the institutions were sellers here, right? The institutions now aren't loaded up. They're sellers because they took profits on this, but they want to be long. So they inject a little bit of FUD. Let's get the public to panic. They sell. What do you think the odds are that this is sort of reload zone down in here off of these clotheslines? I bet it is. Doink. Look at that, eh? Isn't that incredible? It's like so cliche. So really, all that was done here is, you know, institutions, big players, whales, whatever the hell you want to call them, load up, pump the story, news comes out, some sort of event, big orgy, right? Is this, then they dump it, right back into support, back into institutional levels. I don't know whether we're done here yet. They might have some games here, right? You can see the profile. There's a lot of unfinished business here. And considering I actually think that this original move was a pump, I wouldn't be surprised if this thing is quote unquote in play right now. Does that make sense? So I think that they're just sort of playing with the public. And your job, of course, is you cannot chase. If you wanted to get into this thing, you were told exactly where to start looking. I think if anything coming here, you're playing just pure momentum. Your momentum signals better have fucking W's out the yin-yang, and you better see volume coming in, right? And that's sort of, you know, Davos, that kind of stuff. Does that make sense? If you don't see the Davos and you don't see the real powerful momentum push signals, then this is actually extremely dangerous, right? Because you're actually potentially walking into a selling zone here. So you can see how incredibly important this zone is here. If this thing is a bear, right, those damn bears, the guys who put the top in here, they're going to come in and defend. So, you know, as I said, and really ideally you'd love to have like news driven. You'd love to see the volume just ramping up here and the bears are just getting run over and just literally running for cover. Does that make sense? All right. And you know, and this is why I kind of want to be like, what I want to do ultimately on this site is have like sort of a 24/7 feed so that we can like literally watch the play-by-play, because this is a really interesting story. So now we look at the volume and you guys tell me, are the bulls coming in size here? Something's not right. Right. If anything, this is potentially actually telling us that the bulls might be falling asleep. And if the bears actually come out in size here, this could turn into big trouble. So I don't know whether it's such a good idea to chase this, right? This can be kind of tough. And also too, like I said, what I think's probably going on here is quote unquote this thing's in play, right? And also too, if I just ask in the TRI lounge, hey, what's the consensus on IOP, right? I think on balance, people would be like, oh, that's it's a bit of a tough one. Ask Benjamin. There you go. There's your answer. And it's not proof of stake. All right. So anyway, there's my comment on IOP. Be careful here, okay, guys? Be careful. This is dangerous up here. This smells of trouble. Okay. And I only answered that because that was posted here today. Oh, that was Kevin. Kevin did that. So cool. Actually, and I remember when I looked down here, it said like 11 minutes. So I think I gave you like a 15-minute soliloquy on that. Are we having fun here today, guys? Is anybody enjoying this? Should I keep going or should we call it a day? I don't care. It's 1 o'clock. I have to be on the road here, let's say, actually in about a half an hour. So why don't we'll do a kind of like what we do with the daily brief. We'll give, we'll say 2 more ideas. First 2 posted. Because nobody else actually posted anything today. All right, ADX. Kevin, you already had one. That's not fair. We've already done storage. All right, isn't that interesting? ETC. Okay, that's interesting. Let's go take a look at ETC. Thank you, Wayne. Or were you just saying etc.? I wasn't actually asking for Legends. That's a good one. Because I think that those guys, they're sharks, right? Because they're from Vegas. They know how to play the game. I think that LGD is really worth taking a good look at here. Okay, ETC. Where are we going to look at this thing on? What's sort of the most popular? Well, what the hell? We'll just go Phoenix. Oh boy, I don't know. This makes it pretty simple. Don't see a hell of a lot here, guys. Oh boy, Swiss cheese even on this recent rally. Anybody who's actually watching this video for the first time, a chart like this actually makes my job really easy. Does anybody see any sort of predominant letters of the alphabet on your screen here? In fact, here we can even put away all this internal stuff. Is there any sort of letters of the alphabet that are kind of jumping out at us here? Yeah, and we always say, to make it really simple, and sadly, of course, you only see it in hindsight. But we have an old rule. If you ever see the market starting to smile at you, get ready. So, and then, of course, we've got the sort of double smile action going on here. So, yeah, it's a tough one, right? What's really cool, and I hope that you all can see the exact opposite of what is it that we want to see to sort of have the exact opposite opinion, and you can clearly see where the bottom is. And if anything, what this almost looks like is can you see the market symmetry here? It's almost artistic. Let's see if I can do this. And of course, if you're a bull, you're gonna go, fuck, don't show me that, Brian. But gotta do what I gotta do. And then we'll go. All right, let's see what we got here. Yeah, very similar, right? Look at that. So, and hopefully everybody, you want to learn something new today. How did I do that? Right? Just go over bar pattern. I just drew the bar pattern. Then I went in and clicked settings on the bar pattern and clicked flip and just moved it over. Just like that. So, and like we were just talking earlier about heads and shoulders, knees and toes. If anything, here's actually a really good example of using a logarithm. You'll see this probably a lot better and easier if we look at it on a log scale. Boom. There we go. So on a log scale, you can really see that head and shoulders, eh? And it just speaks to the absolute nutsomeness of price action here. So, on a log scale, you can clearly see where sort of value is. I mean, this is basically where all the directors, insiders, ICOs, that Silbert guy, right? This is his coin, right? Barry Silbert. Is that right? Somebody, can you confirm that? I don't know. And I suppose, Michael isn't here now, but Michael doesn't really have the highest impression of Ethereum right now. So if Ethereum has to back off, well, wouldn't surprise me if this thing was sort of dragged down with it. So, the old adage, can we look at OMG, please? Well, actually, I think you're a little late, my friend. I'm just kidding. Okay, so I think we've talked ETC. There's no W's, there's no bottoms working right now. If you're going to trade this, all you're going to be doing is playing some sort of dead cat bounce of this range here. Actually, really good example of accepting back down into value. So I just don't see anything there to get too excited about. Okay, so we were going to do LGD. I'm really interested in this, but I don't know. These guys might wash the lows here just to piss everybody off. But wow, look at that, eh? Really interesting looking little, little coin right at the bottom end of his range. I was more than happy just to go in and take some nibbles down in here. Little surprised that they broke these lows. It'd be interesting to see what the sort of status of that prize fight and all that crap went. I suppose one could argue kind of value. Do we need to explore down into this tail to try and establish value low? That could happen. Could totally see that. And really, on balance, this is the kind of thing, I've talked to you guys lots about this. If I can realistically see, and keep in mind, these are like multiples, right? So if I'm going long at like 0.0003, can I see 0.007, right, which basically gives me a double? Can I realistically see that going down the road? I think on balance, it's not unrealistic to look for that area. If anything, this is like ETC after the event, right? ETC right now is coming down into here. Should we buy it? We're coming down into value. Usually what we have to do is come right down to value low. And I would even argue that this thing might even stab down into here just to create a low of value here. That's totally possible. If I throw a buck at this thing, is it realistic? Even if we, I mean, heaven forbid, but totally could happen. Even if we had to probe down into here, I don't know. This tail looks a bit suspicious here on this LGD. Maybe we got to go and do some business with that. That would suck, horsecocks, but, it's totally possible. If you were trading this thing, non-little old lady, taking a little bit bigger bets, and we lose these lows, I would really, my attitude is I might even just walk from the trade. I suppose if you were waiting for this double bottom to confirm, we wanted to see a breakout through that line. You can see it just never came in. So this W hasn't been confirmed yet. We got this nasty empire working here. So it looks like, this thing's a bit heavy here in the short term. Would like to see this thing come back, but, if I haven't heard too much about the talk about that prize fight and all that promotion and stuff. If this thing loses these lows, this could be a bit painful here for you for a bit, guys. I'm not going to, let's call a spade a spade. If anything, maybe take a little solace if you are long or if you are a potential bull. We did go in and put in an inside bar reversal here. So there's a hell of a fight going on right now. And if anything, if you wanted to frame your participation in this just based off of the resolution of this, I wouldn't have a problem with that. You can see where they've left a gap right here. I don't know whether that's a gap. That looks relatively filled. So right here, if you're a prospective purchases, and really I would probably even say, well, yeah, okay, that makes sense. So if we look at the entire range, the distribution, there is value low. That would be that gap. And what do you think the odds are that that's sort of reload zone kind of talk? Yep. So there's the gap. There is the reload zone. There's the bottom of value. So if you were interested in playing this thing, I can understand, nibbles down in this area here. If you did nibble off of this test of this range here, then yeah, and that's what I did, then yeah, we just got to sit tight. And there's a hell of a lot for us to do. If you took larger than nibble trades and you were getting a little chicken shit, I think this empire here was your signal. Just, let's just hop off and let the dust settle. And, for those people that were trading setups, the fact that this double bottom didn't actually fire leads me to believe that this thing still is trying to explore down against these lows here and trying to find its bottom. So actually really interesting story of a trade that I was, quite enthusiastic about, but doesn't look like it's going to hold. Always a good idea, if I'm doing this crypto portfolio for the site, that all I do is nibble portfolio in that trade in particular. If I had taken any larger size risk on this, I think actually I might be inclined just to walk away. And maybe at the very least, just hop, take my lumps, and just wait for some sort of W to come in here and then reallocate the money back in. So everything can't be sprinkles and sunshines every day. But that's a very candid analysis of what I see there. All right, we'll do, okay, we'll do one more just because payment's such a sweetheart. The OMG, I certainly couldn't buy this thing. It's just way, way too risky. But I do understand there's probably quite a bit of interest in the group in this name. This is just looking at a log scale. Wow, what do you think, guys? Does that think I'm a long way or what? If we just put it back on a regular price scale, there is sort of, this is the relative to Bitcoin price. Is this the one that you wanted to look at? You want to short it, eh? We were following this trend line for quite a while. It is interesting. Check out payment. Do you see this inside bar here? Right, I think the bearish resolution of that inside bar, in essence, that is a fractal. That was sort of your short level right there. And then, for even the level twoers that we just did the educate, their current week's program, we just simply suggested wait for some sort of structural signal following the trend line failure to take the trade. And again, that if you waited for the full M to develop would have you short from there. So it will be interesting. It looks to me like there's sort of like a short window, and I wouldn't be surprised if we do reload zones back up into there. Look how the 61.8 is right in that window, and 78.6 is right up against those wicks. See that? So if you want to talk trade location, I think your trade location probably somewhere up in that area. Don't really like the fact that it's such a massive wick here. I think if anything, there might be some play against these candle body highs. So, in essence, if I was thinking short inclined, I want to see a burst up into here. Then I want to see nice signs of failure so I can get short off of these original fail levels. Does that make sense? Weekly price chart. You can see on the weekly basis, that's one hell of a spinning top. Actually, this is what they call a spinning top. You ever seen that before? And the weekly empire won't fire until a break of that low. So that's way down there. But this is a spinning top. So you can see the doji failure right off of that level. All right, guys, I got to get ready for the boy. So you guys have yourselves an awesome rest of your day. Try and play from a position of strength. If anything, let's watch. Probably on Bitcoin, we got a nice little bull bear battle here. If we can accept back above yesterday's highs, which is 38.10, call it somewhere in that area. Check your respective exchanges for whatever that level is. Then the bull's in charge, and away we go up. If we break back below 35.14, so a nice friendly $300 trading range. Woohoo! Crazy crypto. And of course, Thomas and guys like Ian. And now, oh God, I was chatting with Ian in the level 2 Telegram group. He's like, you could just literally see the evil genius rubbing his hands because now he's starting to apply horizontal support and resistance to his charts. Oh, goodness. So the point here is, with the $300 trading range, build your trading plans off the lower time frames. There should be lots of setups for you to hunt. Try and play from a position of strength, right? Manage your emotions because price is so volatile right now. But really, I don't think we get any clear directional change until either of these two levels are taken out. L2, EVU just came and went. You saw the U.S. stock market. First thing tomorrow morning, I'm going to be in there shopping for those NASDAQ put options. So, all right, guys, you have yourselves a great day. All the best, and bye.